stop clicking on it and say, oh, the market's crashing. I hear real estate coaches saying, y'all got to get prepared for the real estate crash. For inventory, you're going to become a listing agent. I'm like, what crash?
Yeah. I think, Johhny, I see those videos, they get sent to me as well from folks, and I love it. I mean, you can always send me something at david@keepingcurrentmatters.com and we'll take a look at it. And, the thing about those videos and those coaches and experts that are doing that, they always have something they're willing to sell you to help get you through it. That's the good news. Okay.
So I don't even know if we're streaming, but we're recording. We got people here. So David Childers, what are we talking about today? We always have good things we got to talk about. And, it's interesting because I noticed this in groups, and it's almost a pet peeve of mine, is that you're going to talk about some really important information today, and we got 140,000 people and 86 will tune in, right? Yeah. Where yesterday I kind of insulted realtors a little bit. It was intentional. It was clickbait. And we had like so many comments, hundreds of comments, hundreds of reactions and everything. It's like, oh, look at that. Did I rub but to better themselves and everything else like that. It never happened. So I hope everybody tunes in and listens to you, because out of all the webinars that we do in here on a recurring basis, I do think yours is the most important. So,
well, I appreciate that.
With that said, hey, everybody, looks like we're now streaming to Facebook, and welcome to the, what is it, bi-monthly they call it, twice a month episode we do with David Childers from Keeping Current Matters, where you talk about what I think is some of the most important information agents need to know, and that is the economic data and trends of what is happening in the real estate industry, the mortgage world, and the economy in general. So welcome, David. How are you?
Thank you, Johhny. I'm good. We're excited to be back on a Friday. I always enjoy these conversations that we get to have, because we get to talk about what's happening, what's really going on in real estate. And, my goal is that, we take the next half an hour and we give you the truth. We say all the time, you mentioned it a minute ago, there's a lot of clickbait out there. There's a lot of information in the world that oftentimes does more to terrify people than to clarify what's actually going on. So I'm going to try to break some of that down for you today. And I'll tell you, we've talked about it, Johhny, but I guess probably the biggest question that we've gotten and continue to get, and information continues to come out on it, is the market slowing down? We saw pending sales come out and people are like, pending sales are down. So I'm going to talk a little bit about that, talk about, what rising prices, the effect they're having. And I'm going to close out with something today, Johhny, that, like we used last time, a great graphic to be able to go out and record a video on. So I'm looking forward to talking, and you tell me what you want to talk about as well. We'll definitely do it.
Yeah, let's talk about that. And I saw an interesting
too. Tell us what folks that are listening, what do you want to talk about? What questions do you have? But go ahead, Johhny.
Yeah, I want to talk about two things. One, I mean, we don't even need to talk about it because we don't have enough data about it. But boy, I just want to let y'all know, if you don't know, now you know. What's today? Is today the 2nd? Today's the 3rd. So yesterday is when the story was published. iBuyer company named OfferPad. Y'all know OfferPad. You've been hearing about them, complaining about them for the past couple of years. Who is a company who their CEO, or the founder, is led by Zillow CEO Spencer Ascroft. They went public at $2.7 billion. $2.7 billion with a B. That's a lot of money. That's a lot of money to go IPO, right?
Yeah.
Especially for a company that flips real estate.
Yeah.
That's crazy. So y'all understand when, people snicker. Saul Klein posts a lot in the group about these high-level economic things. With the exception of David Childers, Saul is probably the smartest person that I know. He helped create IDX and everything, right? So when he posts this high-level stuff and it gets 1 or 2 likes or something like that, people are like, oh, or he posts about pending changes and things like that are coming down the pike. They've been fighting about this since 1980, 1990. It's just finally they've been chipping away at it enough, and the moons are aligned and everything's aligned that they can finally do this, that you all got to be aware of what's happening out there.
Yeah.
Don't snicker at it. Don't laugh at it, because this is directly going to impact your livelihood in the next couple of years. But what can impact your livelihood is knowing the data right now. And there was something that was really interesting to me that David and I were talking about. And 76% of mortgages right now are conventional. And that's the highest that it's been since 2008. So we got what, 13 years there that other things had market share, but now conventional has the highest market share that it's had since 2008. That's pretty interesting. So I would like to know, David, from the people, if they can comment, are you seeing any change out there in finance terms? Are you predominantly working with?
You kind of broke up there, Johhny. What'd you say? Are you seeing any changes in what terms?
In the financing terms and stuff like that. My computer says 6%, yet I'm plugged in, so it should be going up. Okay. If I die out, I'll be back.
Yeah, no worries. Well, I can tell you this: we're not seeing wholesale changes in guidelines, unless somebody wants to weigh in on the chat here and say, you know what, I'm seeing guidelines go different, and more people were able to go out and qualify than what was going on last month, the month before, whatever it is. I would say on the rise in conventional, that's directly attributed to price growth and equity growth in homes. So if you think about a government loan, what's the benefit of it is you can get in for a lower down payment, you can get in, finance higher LTV. And when you get to conventional, what do you want to have? You want to have 20%, you want to avoid PMI, and you're seeing more people refinance into that because it's a better deal. They're getting better pricing on a conventional loan, and good for them. It helps save money. And so one thing we always say is that renters don't get a chance to partake in that, in the rate and term refinance and the ability to lower their payment for their mortgage. So I think it's a direct attribution to where we're at in the market. And I think going back to this, the OfferPad IPO, OfferPad is, and iBuyers for that matter, are kind of going fast in the market right now because it's a rising price market. Now we start to see this market start to shift a little bit. They're going to have a little bit of struggle, but they know what they can buy right now. They're going to sell it for more oftentimes, once they get it. So that's a good business to be in right now.
Yeah, for sure. It surely is a good business. It's a good business always, but it's a good business to be in right now. What else are you seeing out there, David? I know that I was reading something earlier that we're coming to, I think the term was 18 months that people were able to be in forbearance, and we're at the end of that, or we're approaching the end of that. How are we looking there?
Well, it's not a big change there. We've covered forbearance, Johhny, for the last year, and the story is not what's being told in the media. Now, I don't have an update. I'll bring an update when we're together in a couple of weeks, if that sounds good. But I can tell you, half the people still, it's about 45% are coming out and didn't need it. Another 40% or so are going through a workout with their bank, and their bank is saying, hey, look, we want to help you however we can. And there's about 15% that still, are in some type of trouble. And I just don't see right now where there's a situation where people go into foreclosure. Case Shiller just came out and said year over year, 17.2% appreciation in homes across this country. If you own the home 1 year, you can pay a commission, put some money in your pocket, and hopefully help your family through the crisis that you're suffering through. And I feel for folks, but I don't see a scenario where we're going to see these foreclosures come to market.
I agree with you wholeheartedly on unless there's some sort of big impact, right? And who knows, but the economy seems to be going in the right way. And we don't talk politics here, right? But there's things going on, and people are like, oh, that's going to implode the economy. I don't see it. I mean, truthfully, that's just another day in the world, right? Well, it really is just another day in the world. It just happens to be broadcasted.
Yeah, and let's kind of go with what we know. One, systemically, we're not seeing that in the housing market. If you want to talk about things outside of the housing market, on some level, we're going to have to add Martians to that as well at some point.
Oh, yeah.
We surely are. Come and attack what's going to happen. But inside the housing market, probably the biggest news we've seen in something I'd like to talk about is the drop in pending sales. Big headline, a lot of people talking about okay, pending sales are dropping. Is the boom over? Is the market slowing down? So I want to bring a little context to that. And I'll share a couple of slides to get us going here. And first one here you see in this NAR's July pending sales report, the pending sales dropped 1.8% month over month. The drop year over year 8.5%. And you see Lawrence Yune's quote there, the market may be starting to cool off slightly, but at the moment, there's not enough supply to match the demand from would-be buyers. So this is a headline in real estate that's caused a lot of people to go, okay, what's happening right here? And I think it's something that's worth talking about and being educated on, because the buyers and sellers that you're talking to right now are seeing this. And when you see this, you are concerned to say, okay, what's happening here? Last thing I'm going to do is go out and buy a house right now that I might think is going to be worth less, a year from now. So let's break this down a little bit. I pulled another quote here from Odeta Kushi at First American. She says, we are seeing some signs of softening in the housing market, but context is important here. We're still very much in a seller's market, but we're seeing some early signs of softening. So, as we start to look at data that's out there, we're seeing a little bit going, okay, so a little bit of softening in the market, but I want to put this into perspective. If we go back to that pending sales report, this is a look at pending sales going all the way back to 2012. And you see, we're kind of cooking along here, pending sales in this country. We dipped down during the pandemic when everybody has to go on lockdown. Sellers, pulled their homes off the market. Buyers couldn't go out and buy something. And then we came back and crammed a ton of business into last summer. We said last year that summer is the new spring market. And you can see it right there in this graph. And I placed this red arrow right there on this graphic to show you that's the drop. Okay, so let's look at this into perspective. Where we've been, there's the drop in pending sales. No doubt it came down. And then this is what a historical healthy market looks like. So when we look at that headline, we're helping educate those that we're talking to. Use this graphic because it'll help give perspective or context, as Odeta Kushi said, to what's happening in real estate. Very, very good market, well above where we've been in the past, but coming off some of the frothy or urgent market that we've seen where, we have 15 or 20 or 30 people competing to buy a home. I'm not saying competition is going away and we're not in a multiple offer scenario, but maybe not as many, and I think that's important to look at. If we look at some other leading indicators, one that we've looked at, Johhny, many times is showing time. And showing time is that leading indicator that, if showings aren't being scheduled and folks aren't going out and looking at homes, then those aren't going to turn into contracts. Those ultimately aren't going to turn into sales. And we're seeing the same dip there in showing time. Now, to put this into perspective, July is the most recent data we have from showing time. July 2019, this measurement was at 123. July of this year, we sit at 189. So context, again, is important. Very, very important when we look out at the market. So yes, you can say, okay, we're starting to see a little bit of cool there, but we're well ahead of where we were this time 2 years ago. The hardest thing right now in our business is to compare anything to 2020. 2020 was such an anomaly market that it's very, very hard to look at it and go, things are different. So that's a little bit of a buyer look, and I'll cap it off here with Michael Lane from Showing Time. He says, in general, there are definite signs of cooling demand. However, buyer traffic is still at a historically high level compared to pre-pandemic. So keep that in mind as you're talking to buyers, or if folks think, pending sales drop, so now I'm going to go out and I'm going to snag a house and there's not going to be any competition. No, that's not right. That's not true. There's still a lot of competition in the market. We're well ahead of where we were coming into the pandemic. In context there is very important for buyers.
Context is everything. It really is. And so there's an article that I was reading, and it basically the headlines is the Fed creating a bubble with keeping prices low? No, they're keeping the economy moving. So it is that vital. There's roughly, the last I knew the number, and I'm sure the number has gone up since this, but there's $85,000 in salaries and commissions that are generated through every home sale. Because you got to pay the underwriters.
$8,000. You're absolutely right. Yep.
How much?
$88,000 on a new home that's built in this country, and the ancillary commissions, you think about the blinds, all the stuff that you got to buy, $88,000 is contributed to the economy.
Yep. And so think about that. That money, I mean, when they talk about trickle down, right? That's where it's coming from. Now you get money, you're paying into the economies and you're spreading that across the world. Now, we got the housing demand is still big. We're still growing. We're bringing people into the country. Again, this ain't political, so don't even go there, anybody. We're bringing people, and these people need places, and that's where these people most likely will start in the apartment, and then the apartment people move up to the townhouse, and the townhouse people. So you got to look at these trends, because the chart you just showed shows we're still above anything normal. We're still in excellent territory. It's not going to slow down, and barring some sort of economic, even we had the country shut down and we had a record year. What's it going to take to shut the, bring that to a screeching halt? It would have to be something catastrophic.
Yeah.
So it's going to keep moving. So these clickbait headlines out there, look at the data, and that's the context. Stop clicking on it and say, oh, the market's crashing. I hear real estate coaches saying, y'all got to get prepared for the real estate crash. For inventory, you're going to become a listing agent. I'm like, what crash?
Yeah. I think, Johhny, I see those videos, they get sent to me as well from folks, and I love it. I mean, you can always send me something at david@keepingcurrentmatters.com, and we'll take a look at it. And, the thing about those videos and those coaches and experts that are doing that, they always have something they're willing to sell you to help get you through it. That's the good news. Okay. But here's the thing. I get that question a lot. What's going to cause this market to crash? What's going to cause it to turn or something like that? What I don't get are people saying, how do I make the best of where I'm at right now? How do I capitalize this? So let me break down a couple of things in that order. So we just talked about buyers. Let's talk about where sellers are at. Let's look at inventory right now. I've called this a lot of times. This is the I can sell my home for what effect. We're seeing more sellers come back into the market because they're now saying, wow, we can sell our home for that. We can then take that money and maybe they're going to buy another home. Maybe they're going to use it for retirement. Maybe they're going to send a child to school. Maybe they're going to start a business. Whatever the case may be, sellers are seeing the opportunity, and we see it in the data. They're coming back in the market. And over the last year, we know a lot of people have stayed on the sidelines. But here's a very interesting perspective that I don't think a lot of people are talking about right now. And it comes from Realtor.com senior economist. He says, I expect an unusually busy fall season. Sellers are putting their homes on the market. Normally, this activity happens in early spring. Okay. We're seeing buyers go, we tried to buy one and we lost out. Maybe we're frustrated. Maybe they're deciding they don't want to do it. Maybe it was a summer and we didn't take vacation last year and we took 2 this year. But we can see that, and we see sellers coming back into the market. A clear trend here calling for a very robust fall market. So if you needed a reason to reach back out to somebody who is trying to buy, I would be talking about this. You need a reason to reach out to somebody who's thinking about selling, I would use this. And Johhny and I are going to use something at the end, a graphic that I want to show you here in just a minute about a great way to reach out to people. But here would be the fear that I would have right now, is that people would think we're heading into, is this a normal market? Okay, are we starting to slow down? Are we going to get into a normal market? I want to make the case that this is anything but a normal market. The average interest rate on a 30-year fix for the last 20 years has been 5.1%. Where we stand today, 2.87%. As of yesterday, recorded by Freddie Mac in their weekly measure of the 30-year fix. That's not normal, nowhere near normal. Price appreciation, I used to say price appreciation in this country was 3.8%, but the last 2 years, Johhny, have shifted that to 4.1%. We're actually seeing the average price appreciation shift up because of so much appreciation we've seen lately. What Case Shiller just come out and say 17.2% year over year? That's certainly not normal. No way near it. If we looked at a balanced market in real estate, we look at like 4 to 6 months in a balanced market. Where do we sit right now? 2.6 months in available inventory. That's not normal.
That's not
days on market, 35 days on average on days on market. Where do we sit right now? 17. Yeah. And in reality, it's less than that. That's to get recorded and get everything done. But days on market, extremely fast. Offers per listing, maybe we see a couple of offers. Historically, we're at 4.5 right now on the average listing in this country.
Yeah.
Not normal. Here's the kicker, the last one: sales price to list price ratio. You know, forever in this business, if you could get 98% of list price, you're a rock star and you're winning that listing. Where do we stand today? We're on average, the sales price is above the list price. We're in a market that's in anything but normal, Johhny, all across the country in real estate. And I would say, keep that in mind as you see these headlines and you see things that, you know, cause confusion and people to go, okay, what's happening? Is this thing ending? And, you know, is this thing about to turn?
And to validate that a little bit, Corley says on Facebook, I listed a 3-bedroom home in Vegas yesterday and have 3 offers already. And the home builders are pulling commissions to agents or doing smaller flat fees. We're starting to see that with several builders. But the point of that was, you know, he listed the home yesterday, 3 offers, bang, right? So it's still happening. Right. It depends. There's certain parts of the country it's happening more, right? Florida is off the hook right now. And we're going to segue into that printout or that graph that you have, I think, because if there was ever a time, listen, when I was at the big market center training, the kid who was in my group with me, my team with me, and ultimately ended up becoming the team leader there. And I've known him for decades, and we would talk often. He was my first accountability partner. We would talk often about when is the best time to lead generate, like yearly and blah, blah, blah. And we both agreed that lead generating from September to December was all you had to really do to get new leads, cold calling wise or following up. And then you just had to nurture for the rest of the year. Now, I know that we can pick that apart 7 different ways to sundown. The point is, a lot of people, the reasoning behind that is traditionally you would call somebody in September and they're saying exactly what your graph said. Well, we're going to be listing in the spring. Oh, now I got these people to follow up. So if I had 20 of those people that I'm having that conversation with in the last quarter of the year, I'm coming into the first quarter, second quarter with 20 solid prospects, right? So that was the methodology behind that, or the brainwave behind that. You just validated that. So I want every agent out there to hear what you just said. Let me rephrase that. I want every agent out there to listen to what you just said, not just hear what you just said, but listen.
Yeah.
They're listing now, not in the spring.
And I'll double down on that, Johhny. Let me tell you this. Whoever finishes this year strong with those listings will start next year even stronger. If you're the one that's got those listings coming into the end of the year, and I think we're going to see a very busy fall market. You know, our business, we typically, everybody gets back in school. We're coming up on Labor Day, and, you know, depending on when school starts, we're going to see a very busy market. Whoever finishes this year strong with all those listings is going to go into next year even stronger. Now, one of the things that we had fun doing last time is we talked about, you know, how to go out there and a reason to call somebody, a reason to make a video, a reason to go out and do it. And Johhny, you're the TikTok expert and social media expert. I know you think I am, not me. But let me give you a couple of visuals and a storyline if you're looking for something to maybe record a video on right now. Okay, I'm going to give you a couple of stats coming out of a recent bank rate.
And then I'm going to give you a multi-million-dollar idea what to do with that video, but go ahead.
Johhny's going to do it. So let's look at the visuals on it. First one, this is a look at the average 30-year fix going all the way back to 2020. That's where we sit, 2.87%. Great rate for a mortgage. Great background for a video. Okay. Now let me show you what's interesting what bank rate just said. Now, this is a great reason to call someone or to make a video and pose this question. Here's what they say. While the savviest homeowners already refinanced, some have even done so twice. Millions more have yet to take advantage of mortgage rates that once would have seemed unthinkably low. Among homeowners with a mortgage they've had since before the pandemic, 74% have not refinanced. Wow. Let me say that again. 74% have not refinanced. Great reason for a call. Great reason for a video. Have you taken advantage of these great rates? No doubt. And why haven't they refinanced? Well, they don't think maybe they'd save enough money. Maybe they think closing costs are too high, too much paperwork. They plan to move or pay off a loan. That'd be something good to find out,
Yeah.
right? Conversation. Have you refinanced? Have you taken advantage of these great low rates? Here's another interesting statistic from that report. Homeowners with a household income over $50,000 are nearly twice as likely to have refinanced compared with homeowners with household incomes less than $50,000, just 13%. There's opportunity still in having those conversations. I'll go double down even more of this. A third of homeowners don't even know what their interest rate is. 38% of homeowners with a mortgage don't know their interest rate, including 1 out of 2 millennials.
What the hell do you get to talk about at the neighborhood barbecue then? I mean, isn't that the whole new bravado is, oh, I got a 2.4% rate. Man, I want that.
Yeah, that's absolutely right, Johhny. Absolutely right. I'll end it with this. Greg McBride here from Bankrate says, my concern is the high-level millennial borrowers that don't know their rate. They could be oblivious to a tremendous opportunity that currently exists. Great visual, great storyline to go out there and deliver that message. And Johhny, you're the best at showing people how to do that.
So you know what I would do? You're going to make a video on this, right? And here's the thing, before I even start talking about this, everything that you just said, I know some real estate agents would be like, but I sell houses. Yeah, that's the problem. So don't 1.5 million other people. And I'm listening to a book for the 4th time called Talk Triggers because it's that good. And in Talk Triggers, they talk about, take the Cheesecake Factory, right? They only spend like a ridiculously low amount of income on their advertising. They don't need to because everybody's talking about how big their damn menu is, right? And that's the talk trigger for them. It's like they got everything. So that's what the talk trigger is. But he was talking about, he touched on USP, unique, what's your unique selling proposition, right?
Right.
That term is thrown around the industry just as much as, oh, what's your ROI and what's your GCI? It's like a whole bunch of roosters having this conversation with these acronyms, right? But the problem with the USP is what they were talking about is it has plenty of S&P, but it doesn't have any U, especially in this industry. Yeah, what makes you unique, right? Yep. What makes you unique? What makes you unique is being that educated person, being that well-rounded professional to guide somebody. And I can promise when you stop selling homes and you start to provide proper service, you will increase your ARPU, your average revenue per unit, because armed with this information right here, I would be talking to the people about refinance. I would make a video and put it on YouTube, which is absolutely free to do. I would make a postcard towards a demographic that I'm going to with a scan code that goes to my YouTube video. And on the card, it would say, do you want to learn how to increase your, blah, blah, blah through real estate or whatever the hook line is? I would do a little research on some keyword terms or some emotional keyword terms. And then I would send out that postcard to my demographic or to the area that I farm or to my sphere and all those folks, the people on your news list. And you can do this not only just in print, you can also do it in digital. And you can make a video talking about how they can, if they bought here and here or that equity and what that could do to buy another asset and have your financial advisor, have your mortgage person in the video, make it a good video, make it an informative video, not a whole bunch of stupidness. Get all that out of there. Just be straight to the point that says, if you bought your house at 250 and it's worth 400 and you're at this rate and we're at this rate, you're going to have this amount of money that you can put into other nest eggs. Blah, blah, blah. Educate the people on what to do. And by doing that, I can promise you will get more sales. I sold a house to a dude once, stayed in relationship with him, constantly had conversations about the markets up here and stuff like that. He ended up selling a bunch of his assets down Mass, ended up buying an 18 unit with me, a 6 unit with me, 2 or 3 houses with me, sold the son's house, bought another son because I could have the conversation with him. Nothing more than that. Millions of dollars. And we're talking about selling his place now for $2.5 million that he paid $795 for.
Wow.
Right? That's a great quarter.
Yeah.
Right? That's a great quarter, all from being educated in the economic area of these parts and being able to have that conversation and Listen, at the end of the day, guys, your job is to solve problems. That's it. Solve problems. You're trying to bring a buyer and a seller together. That's the problem. But there's a whole real estate market out there. Learn how to tap into that. Learn the commercial products, because when you got 25 or 35% down and you can buy an unconventional home and it turns in $150,000 a year in gross income, a lot of people want to hear that. How do I get that?
Yeah.
Right. So take the information that David just talked about, refinancing. Maybe somebody doesn't want to buy an 18 unit. I'm partners in a couple of them. They're miserable. Maybe you want to buy a townhouse. Maybe you want to buy a vacation property. That's another big thing people are cashing into right now. Understand what the second home market looks like, or how the second home product works, and turn that onto something. Hey, listen, market's really great, guys. Have you thought about buying a property up at the lake or out at the beach? I mean, that's what I'd be saying to people in my town here, because they all got a bunch of money and big fat homes, right? I'd be saying, do you want to buy something out at the beach or the lake? Because they all do.
Yeah.
Right. To keep up with their neighbor, of course. It's all appearances. But these are the $1 million ideas where you got to think and stop thinking just, oop, I got a sale. Oops, I got a lead. I got a lead. Make it happen. And when I say make your own inventory, this is the stuff I'm talking about. Create your own inventory.
No, you're
through these
right.
knowledgeable products, through video, and then drive traffic to that video. Anyways,
Yep.
There's your multi-million-dollar idea. You all put $2 million in your pocket in the next 6 months. Gross revenue, I mean. Said production. I'm sorry, production. Whew. You all do 2 million in production. Just following that, I can guarantee it. Just do that video, get it out there. Put the information out there, and you're gonna get plenty of slides at Keeping Current Matters, because when you go to try KCM.
That's it. You got it, Johhny.
TryKCM.com. You can try Keeping Current Matters for 7 days.
14 days.
14.
14 days.
He just gave you double the offer that I was going to give you. Try it for 14 days. The information in there. And listen, Linda, they put out blogs every day. That which means you have content to put out every day. Hey, in this recent article that I just read from my authoritative data source, they said that So if you want to know what's going on with the market, this is what's going on in the market. I'll see you tomorrow for the next economic update. Right there, you can be on TikTok, you can be on Instagram, you can be everywhere. Then you can rewrite the article in your own words, in a way, sourcing the article, referencing the article. You can put that on your Google business page, and you're going to look like a champion. Right?
Absolutely.
This is what it takes, guys, to really stand out. And this is the data that David and his company produces. So go to trykcm.com and get your 14-day free trial. David, closing words.
Johhny, it's always a blast to do these. I look forward to these Friday afternoon conversations that we have. And, like we always say, I mean, be the knowledge broker to the clients you serve. In the world we live today, a lot of people are searching for what is the truth, what is going on. And we have that opportunity and can bring that to folks who use that opportunity. Johhny, hope you have a great Labor Day weekend. Everybody does here as well. And thank you for having me on.
Y'all, I hope you all get to unplug a little bit. David, be safe and enjoy the long weekend. Thank you, everybody.
Take care. Bye.